Assalamualaikum and hi. My name is Hadafina binti Amirasan. We are from Group 1 from BA10. Today, we are going to present about fundamental financial accounting and reporting about our company, Creative Pieces Mind or CPMY. So these are our group members. Next, I will explain about our business background of CPMY. So, CPMY was founded by Nurul Hafira binti Razali. As a student, she struggled to find affordable and reliable printing service. This experience inspired her to create CPMY, a business focused on helping students and entrepreneurs with high quality and budget-friendly printing solutions. This business started with an initial capital of 50,000 ringgit, fully self-funded by the founder. It operates as a sole proprietorship, meaning all profits and risks are borne by the owner. Next is about business characteristic. So CPMY is a sole proprietorship, which means the owner has full control of the business operation. Second, profits belong entirely to the owner, while any losses and also her responsibility. Third, it is managed directly by the owner, with support from workers to ensure smooth operation. The company focuses on providing essential services like printing and laser cutting while maintaining high standards of quality and affordability.
Hi, my name is Shira. A SWOT analysis which is strengths, weaknesses, opportunities, and threats is a strategy planning tool used to evaluate the internal and external factors that could impact a company. The strength of the business is the business offer products or services that customer like and trust, and the price are reasonable, making it attractive to customer. The owner has the skills and the knowledge to run the business well, and the business is active online, helping more people to find it. And it focuses on making customers happy and meeting their needs. The weaknesses of the business is the business doesn't have enough employees to run smoothly and not enough people know about the business and because the marketing is weak and it will struggle to keep customers coming back. The opportunities or chances to grow or improve if the business is expand to the new areas. The business can sell to the new players or people and offer more service which is adding the new products or service can attract more customers. Partner with others is working with other local business can help it grow and use better technology. Modern tools can make things faster and easier. The threats or the risks or challenges from the outside for the business is the competition. Other businesses may offer better deals or services. Economic problems if people may have less more money to spend, the sales might drop. The changing customer might prefer something different, so the business need to keep up. The classification of business item of CPMY company which is assets, liability, capital, revenue and expenses. The assets is which is divided is by two which is current assets and non-current assets. The current assets is bank, cash, account receivable and inventory. Meanwhile non-current asset is printing equipment, finishing equipment, computer and design. Their liability are account payable, taxes payable, the capital, business owner equity which is cash 50,000 ringgit, savings self-refunded, expenses, cost premise which is rental, cost of material, paper, ink and sticker, cost of maintenance service which is copier machine, PC and photo machine. The revenue is sale of products which is printing activities, kitchen laser card, plaque, and souvenirs like wedding card and stickers.
Hi, I'm Dini, and I will explain about recording process of the business. Let's explore how CPMY organize their financial activities through the accounting cycle. The process begins with business transactions supported by source documents like invoices and receipts. These transactions are then recorded in the books of prime entry, including journals for purchases, sales, and returns. Next, the recorded data is classified into ledgers, followed by the calculation of the trial balance, which summarizes all debits and credits. Meanwhile, adjustments ensure all financial details are accurate. Then, the adjusted trial balance leads to the preparation of financial statements. These include the statement of profit or loss, showcasing the business performance, and the statement of financial position, highlighting its assets, liabilities, and equity. With this cycle, CPFY ensure accurate financial reporting, paving the way for better decision making. Here is how the source documents can be categorized into assets, liabilities, revenue, expenses, and capital. First, we will look into assets. For deposit slips, It represents cash deposited into a bank account increasing assets. Meanwhile, bank statements tracks balances and transactions related to the organization's bank account reflecting assets. In liabilities, we have credit card statements, which reflects outstanding amounts payable, which are liabilities, and loan statement. If the organization has taken a loan, it indicates a financial obligation. In capital, we have statement of account, which tracks amounts owed by customers due to revenue generating activities. And in revenue, we have invoice, represents sales or services provided which generate revenue. In expense, we have receipt and payment voucher. Receipt can indicate expenses incurred purchase of goods or service. Meanwhile, payment voucher used for documenting payments made, often reflecting expenses. And here is CPMY business transaction. On 1 January, business bought a machine amounted to RM2,000 on credit from Vincent's Enterprise. On 2 January, CPMY sold goods by cash to wedding planner RM2,000. On 8 January, CPMY purchased paper roll by cash from Sonoco Products with RM160. On 11 January, CPMY purchased A4 paper on credit RM1,800 from Mini Paper Sendirian Berhad. And on 14 January, owner brought in cash capital amounted RM2,000. On 15 January, returned damaged machine to Vincent's Enterprise RM2,000. On 22 January, the business paid RM1,500 to Shafiq by cash for rent expenses. On 25 January, business sold goods by cash for RM2,000. On 26 January, business paid electricity expenses RM300 using cash in hand. And on 31 January, business sold goods on credit to LZ Card and Craft for RM1,500.
Hi everyone, I'm ATHIRAH. I will continue to explain about effect and double entry system, ledger and trial balance. Okay, let's start with the effect and double entry system. For every transaction, there is a corresponding between debit and credit entry. This ensures that accounting equation remains balanced. For your information, the accounting equation is asset plus expenses equal to capital plus liabilities plus revenue. First step is we need to identify which business item involved in every transaction. Then we move to the double entry system. In this double entry system, we need to know where to put the account from each business item. Either we want to put it on a debit side or we want to put it on a credit side. So here we can see a various effect of transaction from a previous slide. The first transaction is business bought a machine amounted RM2,000 on a credit from Vincent's Enterprise. So from this transaction, the business item that involved is assets and liabilities. So the asset will increase and the liabilities also will increase. Then we look at the double entry system. In this double entry system, as we know, when asset increase, we will put the account from asset on the debit side. And liabilities increase, we will put the account from liabilities on the credit side. So we can look on the debit side, we put a machine from asset on the debit side, and we put account payable Vincent's Enterprise on the credit side. Next is ledger. Ledger is a record of all financial transactions categorized by account. For example, I will take it from the first transaction. On the 1st January, business bought a machine amounted RM2,000 on credit from Vincent's Enterprise. So the ledger account that involved in this transaction is account machine and account payable. On account machine, we must put the transaction on the debit side and label it as a machine from Vincent's Enterprise. And on account payable, we need to put the transaction on the credit side and label it as a machine. So we need to complete all the ledger account because lastly, we need to calculate a closing balance. This closing balance is important to carry forward for the next period and used to make a trial balance. Next is trial balance. Trial balance is a summary of all ledger balance to ensure that the total debits equal to total credits. On the debit side, we can see accounts like cash, account receivable, purchases, rent expenses, and electric expenses. On the credit side, we have sales, capital, account payable. So both sides is balanced, confirming the accuracy of the recorded transactions. This demonstrates that the financial entries are correctly aligned, supporting reliable financial reporting.
Hi, my name is AMNI and I will explain our business statement of profit or loss, which also known as an income statement that summarizes the financial performance of a business over a specific period, which in our case, a month from the 1st January to 31st January. It also shows the revenue earned, the expenses incurred, and the resulting profit or loss. So we can see from our SOPL table, the total income generated from sales is 5,500 ringgit. This represents the top line revenue. Second one, cost of goods sold amounting to 1,960 ringgit and still remain the same amount for the total cost of sales since there is no opening stock, carriage inwards, purchase return, or closing stock adjustment. So moving on, and there is also no additional revenue. Only operating expenses amounted to 1,800 ringgit for salaries, utilities, and rent. So we only subtracting operating expenses and we got the final profit for the period which is 1,740 ringgit. This indicate the business is operating profitably as the statement highlights efficient cost control and a healthy net profit margin, making it clear that the business is in a positive financial position for the period. So next, I will explain our business statement of financial position, which also known as the balance sheet, that shows the financial health of a business at a specific point in time, which for us at 31st January 2024, it lists the business assets, ability, and equity, offering a snapshot of its financial structure and liquidity. So we can see from our SOFP table, the business has total current asset of 5,540 ringgit, showing the overall resources controlled by the business, which include cash and also account receivable. There are no non-current asset, meaning the business has no long-term investment like equipment or property. And current liability amount to 1,800 ringgit, which includes account payable. There are also no non-current liabilities, suggesting the business has no long-term debt. The business is also financed by capital and profit of the year, giving the total of 3,740 ringgit for equity. And lastly, the sum of liability and equity equals 5,540 ringgit, matching the total asset, confirming that the balance sheet is balanced. Therefore, our business is financially stable with sufficient current asset to cover its liabilities. The business is in a strong financial position to meet its obligation and invest in growth. So, in conclusion, Creative Pieces Mind is a well structured business that prioritizes quality, effective marketing, and strong financial management. So, by maintaining detailed records and focusing on the strategic planning, the company ensures smooth operation and informed decision making. This strong foundation positions CPNY for sustainable growth and success, even in a competitive market.